Hello, I'm Gwen Preston of Resource Maven, and I'm here at the Metals Investor Forum in Vancouver in November. And joining me is Maryse Belanger, who's the COO of Atlantic Gold. Atlantic is a story that's done very well recently, but for good reason. So Atlantic is currently commissioning the newest gold mine in Canada, a well-managed, low-risk, open-pit opportunity in Nova Scotia. So it's a big story because you've been immersed in it for several years, but why don't you try and summarize what Atlantic is doing right now? What's the mine that's being commissioned right now?
Okay, so we've completed construction in a year of a process plant, which is unheard of in the industry. So just to give you an idea, construction started on August 26th, 2016. And by August 24th this year, we were commissioning the crushing circuit. So very exciting times. And we have been very, very systematic in our commissioning, as one would want to be. So far, no major issues, nothing unexpected. It's all about going through the plant area by area. It's about every bolt, every valve, every pump. It's kind of boring, but needs to be done. So I'm pleased to report that we have completed commissioning of the entire circuit as of the past weekend. And now we're working on ramp up.
Right.
So production ramp up should now happen until Christmas.
Right. And you characterize it as boring. It is a little boring from someone who's literally examining every nut and bolt in a facility. The market has really loved the story, though, and I think that's pretty interesting. The market is realizing, I think, the opportunity more and more in new producers, in, invest in a company when it's partway through construction and get through as ramp up and expansion takes place. And Atlantic certainly offers that opportunity. One reason why, I think, is because the risk was so well managed.
Yes.
In the way that you approached this project. So let's talk, I know you could talk for hours about risk management, but quickly, what are some of the key ways that Atlantic has managed the risk inherent in a new mine?
Well, first of all, and this was really managing risk in a big way, the EPC contract, which is engineering, procurement, and construction, as you know, that contract was a fixed price contract. So pretty much unheard of in the mining space, but it makes a big difference when you want to manage the risk of cost overruns. And we all know that the industry has a really poor track record of cost overruns. Mm-hmm. So that was a very important aspect of risk management. In terms of the mine itself, we have a full grade control drilling program. So what it means that we drill on 5 by 5 meter, 10 by 5 meter in some instances. And we do that 4 benches down. Mm-hmm. And we do that essentially a year to a year and a half ahead of mining. Therefore, we get the results. We have 25 times the drill density that you would normally have, and it allows our mine planning people to take those results, adjust the short range planning to the 3 to 6 to 12 month plan, and really make sure that we have a better plan that leads to me anyway to better business planning. Mm-hmm. And that allows us to deliver on what we said we're going to do. So it doesn't cost a lot of money to do grade control drilling, and we see great benefits in that.
Absolutely. I mean, for those who don't know, the usual way of doing it is to get to basically where you're about to mine, drill some holes into it, rush those samples to the assay lab, figure out what the grade is, and then decide whether it's waste or ore. The opposite is what you're doing, which is knowing a year in advance to a year and a half in advance what every square meter, essentially, what every ton or so of ore, what's going to be done with it. That really stood out to me when I was learning about the project.
Yes.
Okay, so delivering on what you're doing is commissioning a mine that's supposed to produce 90,000 ounces of gold annually at very reasonable cash costs.
Yes.
Or
Cash costs, well, in fact, all-in sustaining costs around $690 Canadian, which is right now about 552, 553 US.
Right.
So very, very low cost base. And what really gives me comfort about that number is, and you've seen it, you were at the mine, we've been mining for 17 months already, so we know our mining costs. There's no unknown there, right? So right now we're ramping up production, and I really believe we can deliver on that $690 per ounce.
And then going forward, knowing those costs is also plays into the next step, which is the mine plan right now includes 2 deposits. There's 2 other deposits right next door that are not yet in the mine plan, but a study's coming out imminently that will add those to the mine plan and increase production quite significantly. So outline a little bit of what's going on with that.
In the background, and we haven't spoken much about that, we have been doing all the engineering work, including metallurgical test work, all the testing that's required. We will be ready to release the results of that life of mine plan study, where we integrate the production of the 4 deposits. And we will be publishing this before Christmas. So, and what all indications are is that we can and will increase production to the 200 to 225,000 ounces annually, that is, at very, very similar cash costs and all-in sustaining costs that we've seen in Nova Scotia. Because remember, we're operating in Nova Scotia. There's nobody better suited than Atlantic to know exactly how much things cost. So the study itself, technical work is progressing as planned. Expect the results before Christmas. And after that, it's all about the permitting.
Right. I mean, the 200 to 225,000, thousand ounces a year, that vaults this mine into a different category. When you're talking about, what mid-tier or major miners might want to acquire in terms of production that actually moves the needle for them, 90,000 ounces doesn't really fit that bill, but 200 to 225,000 ounces a year really does, especially if there's exploration upside, which is like the third leg of the Atlantic stool, right?
Yes. But I would argue that 90,000 at $690 Canadian per ounce does, it's an attractive proposition. But yes, we will integrate all the information, produce the result of the studies. And then in the background, with that money that was raised recently, we have a very large number of targets at the regional level. We are actively drilling some of them right now as we speak. And it is really busy times in Nova Scotia. Just to give you an idea, in terms of the exploration program, it is the largest exploration program in Nova Scotia, bigger than all of the exploration program executed over the last 5 years. Altogether. Yes.
Right.
So really, substantial amount of money going into exploration. Some of it is definition drilling, drilling of some of the inferred material that we know at the 2 deposits. And then there's this large program for regional exploration as well that should bring us some really, really good target to focus on the future.
And that's pretty much it. I think we've covered what's happening now, what's happening in December, and what's happening down the road. So
thank you.
Thanks very much, and thanks for watching.